Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thank you for having me.
Well, more and more people are talking about the equities bubble as the Dow keeps setting new record highs every day. But is there much value in those record highs?
Well, I guess it is if you cash out before the bubble burst, obviously. But no, the bubble just gets, tighter and tighter, and it's quite frightening. Actually, I don't know how long. Well, I do know. I've spent a lot of time in the last month sitting at my desk researching and looking for answers. And, what am I missing? Is there something else? Are there other clues? I ran across an interesting document I was telling you about, dug into that just for some insight as well. But, there is no question by any measure that it is a bubble. And we all know that. And I posted on the website, and if people want to go look at the charts, it's on the charts and quotes page, and I posted, updated the data on the volume characteristics. Remember we talked about that, and how it's been very, very bearish volume characteristics, and that's continued ever since the 2000 top. That's been updated. I've also got on there, some price dividend versus PE material that shows, the historical secular bear markets and where we are today, as well as, the discount rate and I think I also put, I'm not sure, no, I didn't put that on there yet. I thought I had put the job participation and updated those charts of job participation, but I did not do that. But anyway, we all know it's a bubble. We all know that. But then when does it end, I guess, is the question. And the answer that I come up with is that, it's going to continue to stretch and stretch and stretch until one thing happens. And that is we have to see a primary bearish trend change in accordance with Dow theory. Because it's not going to talk, you can manipulate by whatever means necessary for as long as I guess the party can go on. Dow theory non-confirmation can be blown out. I don't know if there's little men sitting in dark rooms buying futures at night. I don't know. I'm not suggesting there is. I'm not suggesting that. Maybe it's just the nature of the market. Maybe it's not. Who cares? The point is that the bubble's going to stretch until it pops, and the first sign we're going to have of a popping will come with a Dow theory primary bearish trend change, and that is one thing that cannot be manipulated.
Why is that?
Because it's a structural occurrence. And once it happens, it's in place. Now, where the manipulation could come from, if there is the ability to do it, would be to negate it, to blow it out, to create another, through whatever measures. If there is that degree of manipulation, I'm not saying there is, I'm not saying there's not. Everybody's talking about the markets being manipulated, so I'm throwing it out there. I guess it would be possible to maybe, blow that Dow theory primary bearish trend change out and create another primary bullish trend change if there is that degree of control and manipulation. But what I'm saying is every 4-year cycle top since 1896, everyone has occurred with a primary bearish trend change. And since that is a structural occurrence, when I say structural, it has to do with price. Has nothing to do with indicators. You know, an indicator is basically a derivative of price, if you will. And I'm saying that a structural event is price. So it tells you it's broken. The structure is broken when that happens. And so I'm saying that cannot be manipulated. That is an inevitable occurrence that has to happen.
We'll have more with Tim Cyclesman Wood right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're chatting with Tim Wood. Tim, gold prices seem to be relatively stable right now, but what do you see happening with gold?
You know, I'm still on the same bandwagon, if you will, that this is a counter-trend advance. I do not believe we've seen that 9-year cycle low that everybody's looking for. You know, every time we get a counter-trend advance, you know, we had one coming out of the December low, and then everybody got excited, and then we had one coming out of the March low, and everybody got excited, and it turned down again, and we had one coming out of the May low, and everybody got excited, and it turned down again, and then we've had this one coming out of the July low. I think it's the same. We may have seen a little higher degree low in association with this overall bounce, but it's still, I believe, counter-trend, and that there is another washout into the final low in gold. I just see it no other way at this point. You know, the structure tells me that, and until that structure changes, then I have to assume that that's what's still in place. And everything tells me at this point it is still counter trend. And I will add that looking at the chart, I mean, I don't have a short-term sell signal yet, but it looks like it's getting close to a top here. And then once we get a short-term sell signal, if it evolves to an intermediate term, which I suspect that it will, but it needs to happen, then that should cap this counter-trend advance, and the downtrend should resume.
What's happening with crude?
Same thing. Exactly the same thing. We saw the low in this case, the counter-trend bounce started in late June, and I think it's the same thing. We're also seeing this, you know, the corresponding move in the CRB complex itself. I think we had some higher degree lows in the CRB, and you know, the test is on there with the counter trend bounce as to whether we've seen even higher degree lows, and that is just going to take some time to see what the structure reveals. I suspect that we have seen a higher degree top in the CRB and the whole commodity complex, but that final test is at hand here, and it's got to bear its fruit one way or the other.
What about other commodities?
I mean, pretty much the same thing. Pretty much the same thing as I use the CRB as a proxy for the commodity complex, if you will. You know, I don't look at individual commodities really other than crude oil, and I follow gasoline, natural gas a little bit because everybody's got an interest in that. But then gold is, the metals are in that basket, but some view the metals as a commodity, some don't. I understand both arguments there. I mean, I see it as money myself, but I do think, like I said, that they're counter trend with another push down.
Getting back to manipulation, in Japan, the Bank of Japan now is going to be the majority shareholder in something like 50 of Japan's biggest companies. What does that tell us if you're trying to invest in the market?
Well, it tells me, I don't know. It tells me that they're desperate to try to hold this thing up. And, I have argued, and there's an argument. I want people to clear their mind and think about something. I have said, and I'm not trying to justify my position. I think I'm right. I'm trying to make people think. And so think about this. I had said that the rally starting out of the 02 low was a bear market rally that carried us into the 2007 top, and that the longer it extended, the worse things would be, and then it crashed and resulted in the worst financial, crisis since the Great Depression. We come out of that low, they do more of the same, times 10 or times some factor, which has created, in my mind, one of the biggest bubbles in certainly in the U.S. stock market history. And so here we sit. But like I said before, if you look at those charts, if you look at like the S&P, the volume chart that I referenced, the bearish characteristics. If you look at that velocity of money chart like we've talked about before, it's not changed anything. If you look at the job participation rate, if you look at any number of economic indicators and stuff, it does tell us that it was a bear market rally. And when you say bear market rally, then you tend to think you get this mental block, and this is where I'm saying clear your brains. You get this mental block that, well, it's a counter trend, it can't go on for years, it's some minor rally. I'm saying no. The whole damn thing from low to present has been a bear market rally, because that's what the underlying conditions tell me. Now, granted, we're at a new high, and this thing has stretched on far longer than myself and any other credible technician on the planet has ever imagined. I'm not negating that. I'm fully acknowledging that. But I'm saying that the entire thing has been manufactured based on manipulation, and that it is a bear market rally, in spite of the fact that it's at a new high. And I think the evidence shows that when you look at that data. And so the answer to your question, I think, is that it's literally a house of cards. Who knows what the consequences are going to be, or how broad, wide, and deep, if you will, that the consequences are going to be once the thing bursts. That's what makes it dangerous. The other thing that makes this so dangerous is that the public, it's going on, and I've said this before, the public, they don't get it. They think, if something is abnormal long enough, it becomes normal. You lose your reference point. So nobody even realizes that it's a bubble. Anybody going around saying it's a bubble is a fruitcake at this point. And, everything seems normal and rosy. And so I think that, it just makes for an extremely dangerous and fragile setup. And as is always the case, the public is going to be left holding the bag.
A lot of pension funds have bought into the equity market. How dangerous is that?
Of course it is for everybody. I mean, the person that don't even think about being exposed to the market. A school teacher in the state of Arizona, and I'm just picking something. I don't even know. Maybe they don't even have a pension fund. I'm just making the point that these pensions, firemen, policemen, teachers, whatever, that have their little state retirements and so forth. Who knows what the fallout of this is going to be? But they're sitting thinking that they're fat happy, and they have exposure too, tremendous exposure.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Tim Cyclesman Wood. Tim, have you seen any strange price action?
Yes, and maybe no. The yes is that, obviously the degree of the extension is strange. And with this advance, for example, over the last 8-9 months, well, since December, we've seen 5 Dow 3 non-confirmations that would try to set up and blow out. And as I recall, or 4. We're in the 5th now, I think. But as I recall, some of those, or if not all of those, 4 occurred on one-day wonders or couple-day wonders with some sort of an announcement. And so, yeah, there seems like, and maybe it's just the market, just coincidence with the market. But it seems like there is, some coincidental or right at the right time, things are blown out. And, can you point your finger to it and say, well, that was outright manipulation, or is it just the market? I mean, who knows? We don't have that answer. But yes, I would qualify it as somewhat peculiar, and I've talked to other technicians that see the same sort of thing. And so it's, a number of us, and I think anybody that's been around the markets for any length of time would agree that yes, we've seen some peculiar price action. But again, can you point to it and say that's outright manipulation, or is it just the nature of the bubble? I don't know.
Well, one thing that definitely manipulates, and it's allowed, is for companies to buy back their shares, which usually means the CEO is going to get a huge bonus at the end of the year because share prices went up.
Of course, and manipulation comes in many, many forms. And I don't mean to sound like that it's necessarily, cutting of interest rates is manipulation. You're right. A company buying back its share prices is manipulation, or buying back its shares is manipulation. I mean, manipulation comes in many, many forms. I'm not, talking about someone buying futures from some desk overseas and, in the middle of the night to prop the market up. I mean, maybe it is that too. I don't know. I mean, that's a rabbit hole that I don't have answers for. But, in short, we all know the markets are manipulated, and as a result, that's why we've seen, and that's what's helped lead up to the bubble that we have. And then here we are. And, the thing is that I guess in trying to close is that it's just, people they just don't understand and get the magnitude of what we're facing here and really how we got here. And that said, I posted, I don't think I mentioned it earlier in the interview. I was talking about some of the charts that I'd updated, but if anyone's interested, go to my website and cyclesman.com, and I had posted a document that I found as the memoirs of Herbert Hoover, the Great Depression, from, I think he titled it 1929 to 1941 or something like that. I haven't read the whole thing. I've gotten started on it. It's a 500-page document. But if anyone wants some tremendous insight as to, what went on then and the parallels with now, I mean, in most cases, you can change the names and the date, and it would read like something you'd read out of the paper or some source today. It's a fascinating and very insightful read. And, Hoover knew how it was going to end. He recognized it. And obviously I think that, it's known today how it's going to end, but, if you can deal with it tomorrow instead of the day, then hey, push it off. And that's how we got here.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com Radio. Our YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Questions for the show or our guests can be sent to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.